Hey y'all, hey, Lysandra Everett here, the Home Biz Tax Lady. And today I want to talk about this no tax on overtime. We've been getting a lot of calls as well as email requests asking about this deduction because it's really not working out how the common taxpayer thought it was going to work out. So I'm here to make this video, explain everything, because there are also some tax professionals that are still not really sure about how this is supposed to work. So the overtime deduction, the part that's deductible is only the premium amount. So if your regular wage is $30 an hour, your overtime is $45. So then it's only that $15 premium that's actually deductible. And there is a limit on how much you can deduct. So for the single filers, single head of household filers, you can deduct up to 12,500 in overtime. And for married filing joint filers, you can deduct up to 25,000 of overtime in a year. And again, it's that premium amount. This deduction is not available for filers who file separately from their spouses. Now, even though this is overtime, it's overtime in accordance with the Fair Labor and Standards Act, which requires when workers work over 40 hours in a week, they get paid time and a half. Now, there are some states, for instance, that pay overtime in excess of 8 hours or 10 hours in a day. That does not qualify. It's over 40 hours in a week. And I think that's like California, Alaska, Nevada, and it may be another one. But these states may require the overtime, but because it's not following the Fair Labor and Standards Act, then it doesn't qualify. So you could have overtime, as required by your state, and it's still not qualified overtime for that deduction. The other thing to keep in mind is this too, is that all of the tax dollars, all of the overtime hours are still subject to state tax, Social Security, and Medicare tax, okay, unless the states change their laws. But the total amount is taxable for Social Security and Medicare up to those limits, and for the state. So it's only that federal income tax deduction that applies. There's also an income limitation for this deduction as well. So for single filers, the deduction starts to phase out at 150,000, and for married filing joint filers, starts to phase out at 300,000. Now, for 2025, there were some employers that were not able to get it together to get that on the W-2s. So you can reference the last pay stub to determine if there's qualified overtime that's available for a deduction for the taxpayer. But for 2026, it is supposed to be spelled out on the W-2. Now, there are also certain professions that have alternate work schedules, like a 410s or that, 312s, that kind of thing. Again, the overtime only applies to hours worked over 40 in a week. So you may have some weeks where you qualify, and then there are some weeks that you don't. Um, so yeah, people are, like wondering, okay, did I get it wrong? Or, is the tax software not right? No, the fact is that the way that this deduction was reported and the actual execution of this deduction were definitely not the same. Okay. So, yeah, I just wanted to come on and clarify that because seems to still be a lot of confusion going on. And it is because it's still the first time that this is happening, but it's still not what people expected it to be. So, there are people that are very upset. Taxpayers are upset. They're getting upset with their tax professionals. And it's just a law. That's the way that the law was written and meant to be executed. Okay. So I really hope this helps you out in explaining the law. But still take your deduction though, right? Even though it's not what you were expecting, still saves a couple of bucks. What can we say? All right, so thank you so much. I hope this helps you out. Make sure you subscribe. I'll see you next time. Bye bye.